Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. It's October 4th, wacky Wednesday. I'm looking at Tesla here, but before I do, let's just kind of look at the overall market. We'll start with the spiders here. Nice move higher today, not a big deal, 0.7%. But we could kind of expect this, a rebound off of the 200-day moving average. You can see it here on the SPX. Still tested the 200-day. This fear index is at 17, which means like, holy crap, we're all going to die kind of thing. So this was definitely not a good thing. The percentage of stocks above their 40-day moving average. I tend to look at this on a line chart where you can see that's an intraday, by the way, and you could see where this troughed right here at 10:30. It's like a buy program went off at 10:30, and you will see that happen. We can look at, my bet is 10:30. Bingo, there it is, 10:30 again. So it's like a buy program came in and started taking all of these stocks higher. This is just something that you need to be aware of. It's a kind of a fine point. But when you look at this on the daily chart, you can see here we've had this big massive sell-off, and virtually every time we get down this low, look at the red line. When we get down this low, we do see buying coming in. And so this is why I mentioned yesterday, and some people gave me crap about it, but I don't really care. I really don't. And by the way, I really don't. Some people, when I said, hey, I think we've got a tradable bottom here. We've got a tradable low. Like somebody goes, oh, you're guessing. Yeah, I'm guessing based on, I don't know, almost 30 years of experience looking at the market and just remembering what I've seen in the past. However, with that said, and it's really important, it seriously still is a guess. It's not a definitive statement, and so don't get the wrong idea about what I'm saying or about your own abilities. You look at historical precedent, you understand why, you understand the dynamics of what happens when things get this oversold. And it'd be the same thing on the upside, by the way, but when things get so damn dislocated that everything seems like it's going to zero, in instances like that, you want to be thinking back and saying, well, wait a minute, the last 6 times things have been this way, and it seems like everybody needs to run for the bomb shelters or the bunkers. That's actually been a really good buying opportunity. And that's all it is. And so you look at this and say, okay, the conditions are ripe for this kind of move. Okay, fine. With that said, though, we don't know. I'll go back to the S&P. We don't know how high this rebound is going to go. My guess is that this at least goes to 4,300. But I can't say beyond that because every single little teeny rally we've had ultimately winds up lower. So you have to kind of assume that this is going to be the same thing. It might not be, but you don't want to be betting on that. And I will just say this. If this is truly a low, you will know it because the price will continue to go up. But so far, all this is a snapback rally off of an extreme oversold condition. It doesn't mean that this is the absolute low. Also, and this is important, all these other lows, they were not bouncing off of a really, really key moving average, the 200-day moving average. But if you look at where the SPY went, it went down not even 9% from the very top. So you can't say that we're in a bear market here. We're not. It might feel that way if you bought at the top, but as long as we're still up above the 200-day moving average, in general terms, you can just say like, okay, buy them. And so the question you have to ask yourself is, what am I going to buy? And also, again, how high up are you going to run? Is this going to be a big move or not a big move? And I think that's the type of thing where you got to take it one day at a time. With that said, you look at Tesla. So they have a bad deliveries number as far as what the market was expecting, and like 15 minutes later, Musk goes, "Hey man, we're reducing the cost on our Model 3s. It's all going to be good." And so that's, in my view, one of the reasons why the stock's up 6% today. I like the fact this is not a great setup because of this big downdraft here. However, there aren't that many great setups around. But I like this one because you can be looking, and we got into a bullish option position today. Should have just bought some calls, but I didn't. You can buy the stock right here and give yourself like a 6, maybe 6.5% risk on the downside, and then look to make about 6, maybe a little bit more % on the upside. So you're essentially risking 1 to make 1. Not the best risk reward, but I think it will work. You can, at the same time, though, say, you know what, I like the way this is trading, but man, if this thing falls back below the 50-day moving average, I'm out of here because I've seen this before. So you set it at 249.50 or 60, something like that, and then you've got an even lower risk. But other than this, frankly, I don't see a whole lot of things to do in the market. I think this is a wait and see market. That's what I'm doing, period. Maybe that's what you should do too.